Most people might not give it much thought as an investment with huge returns because for most of us it's a commodity and it's cheap. It's water. And while we've all heard it could become more scarce, for most of us we turn on the tap and it just comes out. And that's the problem, according to experts on a panel at the Cleantech Forum in Toronto.
Well, it's a free resource. We spend $10 billion a year buying bottled water, but no one wants to pay for it at the tap. I think what we're going to need to see is a change in how that perception is.
For years, pundits have pointed to crumbling water pipes and treatment plants, saying investment is desperately needed in water. But investors at the Cleantech Forum said it's more than that now.
I think scarcity and security are probably the two biggest issues. At NGen, we spend a lot of time looking at both purification and validation of water. So if you're cleaning the water, you want to know what is it you've actually taken out of the water and what are you actually delivering to the customer. So the fear on the homeland security side that the water could be contaminated is one issue. But the bigger issue, as I indicated before, was more of these boiling alerts, the fact that you're actually getting bacteria into the system because the infrastructure is old.
Of course, it gets investors' attention when great returns are posted by water companies. Shares of leading water companies are up at least 30% in the last 6 months, and most are up more than 140% over 3 years ago. Investors have now started making more bets on water. For instance, 2 water purification companies just received high-profile funding in the same week. Stony Brook Purification of New York, started by 2 materials scientists, raised $4.1 million for a new membrane filtration technology, money from Boston's Battery Ventures. And Altella, a water purification company that doesn't use membranes, received a $7.1 million Series A from CCS Income Trust, an environmental services company that could become a customer for Altella's portable shipping container-based water filtration system. The solar sector has provided great returns for investors. Water hasn't had its Google yet, but there is a high-profile IPO expected soon. International utility giant RWE is getting out of the water business, divesting itself of its American Water division. American Water is set to go public later this year. Will it be the next big water IPO?
I don't know. I haven't followed it close enough to understand the fundamentals of the business lately. They're certainly one of the leaders in the sector. The challenge with making money in water has always been, it's a utility, there's not a lot of growth, so you can make money off consolidation as long as the prices of what you're buying are not too high, but you can't price through a lot of costs onto your customers, so you tend not to have that much organic growth in your internal business.
Dykman doesn't necessarily believe water is now the new oil, as they say. There are risks, he says, especially for venture investors.
Water is a place to lose money for venture investing, with rare exceptions. It's not a rapid change industry. It's not a high margin industry. It's very capital intensive. Customer has no budget. Customer can't pass through cost increases. So you got to be very careful where you pick.
Risks aside, good returns are being delivered by water companies in some sectors, and that's enough to make investors take notice. In Toronto, I'm Dallas Kachan.